outside here in the financial district in New York City. I'm Farnoosh Sharabi. I've got Jim Cramer here. Good morning, Jim.
Good morning.
We're outside a Starbucks this morning, and I picked us up some coffee from the bodega a couple blocks over, because you know what? I just can't afford Starbucks anymore, Jim. I know you can.
Now, I have to tell you, it's let's just point blank say it. It's meaningless. It's not just meaningless in the two ways. They raised the price.
9 cents.
This stuff is frankly like gasoline to people.
Thank you.
But here's the issue. The issue is, why did they raise it? They're saying dairy costs. Now, dairy costs are up 60%. I saw Domino's this morning report a really good quarter. They're a huge buyer of cheese. It's entirely possible that maybe, just maybe, the rise in anything having to do with dairy is not as bad, judging by Domino's. But I fear that this is just another problem that Starbucks is having, which is a raw cost problem. People have to understand that there's two major problems with Starbucks that have not gone away. The cost of people and finding 90,000 people every year to be able to put to work, and the cost of real estate. That said, everything has a price. This is a stock that's down from the 40s to the 20s. Yeah. People are thinking it's bottomed. I saw Howard Schultz bought a lot of stock. I don't know whether it's related to options. But I will say this, the stock's done going down. It doesn't make me want to own it. I mean, a lot of times, I see this in Stock Picker all the time. It's like, oh, the stock's done going down. Cramer says buy. No, stock's done going down. So what? Let's see what the quarter is.
They're not going overseas. I think that's a smart move. They closed their plans for expanding in China. I mean,
no, I don't want to see that. I mean, look, the negatives here are overwhelming. But again, for a price, it's all that matters. For a price, there's a price to own Starbucks. If the stock went to 20, it would be finally cheap on a price to earnings multiple. The growth rate's been declining. It's really hard to measure any company that's growth rate's declining. It's much easier to value an Intuitive Surgical, which is up 60 straight points, or Research in Motion, which is up 80 points, than it is to measure and to try to find a multiple for a company that's declining in its growth.
You think this is going to bring down their stock? I mean, a lot of consumers...
No, it's up.
I know,
price increase is price increase.
Time in less than a year.
No, you're thinking totally wrong. Price increase is price increase. We always love to see price increases, whether it's polyethylene, whether it be polystyrene, whether it be aluminum, whether it be copper. Price increases are good. Lack of price increase is bad. It means that they have pricing power. I mean, there's enough people who respect Howard Schultz to say, hey, listen, he looks at the average tab and he knows he can get away with it. If dairy costs are up X and this price increase covers 2X, then the profit margins go up, and that's why the stock's going higher.
All right, it's easy math, but I still think it's not the best coffee. That's what I think.
Who that
Wall
cares?
Street Confidential, outside on the Financial District. Thank you, Jim Cramer.
Thank you.
Stay with us.